Should I buy a home in this super expensive market? I'm calling this video part 2. If you watch the other video by the same title, part 1, I kind of showed you the difference and what the impact would be over time if you decided to continue renting, if you're renting, or whether you decided to go ahead and buy a home. So this one, I'm calling it part 2. It's just kind of an extension of what we talked about in the other one, but I wanted to show you kind of what the market looks like going forward. You know, I hear people say all the time, oh, I don't want to buy right now because the prices are too high, so I'm going to wait for the market to come down. Well, let's just take a look at a couple things here. I want to show you the forecast for our market for good or for bad. Let me share my screen. So here's the forecast for our market going forward. And as you can see here, this is for our MSA, our Metropolitan Statistical Area, which is the Hickory, Lenoir, Morganton market. This is all three of these markets all combined. So you can see our 61-year average here, average annual appreciation is 3.48%. Our appreciation forecast for the coming year is 5.4%, and our appreciation for the next 5 years for this market is almost 24%. Unfortunately, if you're waiting for the market to come back down, it seems unlikely that that's going to happen anytime soon. Now, we all know, with any kind of some kind of a global event, things could change, but this is the forecast for right now. So again, for the foreseeable future, we're definitely on an upward trend. Well, let's just kind of take a look here. I've done another analysis here that's called a cost of waiting. Now, these numbers you're going to see are a little bit different because this is honed into a property in Catawba County, and it's not the general MSA stats that we looked at just a second ago. But let's just look here. This is a $250 purchase price, and let's say you were going to do a 30-year fix with a 5% down payment, so that would give you a loan amount of $237,500. We're doing a 30-year fixed rate, and if we were looking at rates today, with good credit, you're going to be about 4.375 on the rate. And let's just take a look here. What if you wait only 6 months? Only 6 months, half of a year later, look what it's going to be, or look how much more it's going to cost you. The home that you could buy today for $250,000 is now going to cost you $268,000. Why? Because Catawba County is forecasting a 3.31% appreciation. Look at waiting 1 year, it's going to be up over 7%, 2 years, almost 11%, and waiting 3 years, almost 14.5%. Well, what does that mean? Obviously, the home that you buy today for $250,000, if you wait 3 years, it's going to cost you $286,000. Now, when I'm doing this cost of waiting forecast, I just left the rates the same all the way across the board here. So some people think rates are going to go up. Some people think rates are going to go down. I just left them for the purposes of this analysis. We just make the rates flat across the board. But with the increase in price, look at this. Your mortgage insurance goes up. Your payments go up. Why? Because you're borrowing more and your mortgage insurance is going higher. Look at this. So this is showing you if you wait 6 months to buy this same home, it's going to cost you $43 more per month, or $519 a year. If you wait a year, it's going to cost you another $93 a month, and on it goes from there. This shows you kind of in dollars and cents on an annual basis. Let's say you wait 6 months. Your cost here is $8,268. That's the loss in appreciation that you don't get, because when you own the property and the value is appreciating, you're building equity. When you don't own the property, someone else is building equity that you will then pay when you decide to buy the home. And then the amortization loss. Well, what does that mean? Well, when you get a loan, you're going to start making payments on it, and you will have paid the loan down by $1,900 over that first 6 months. You add those two together, $10,000 is your cost. And you can go on, through these examples. Look at this. If you wait 3 years, $48,000 more it's going to cost you for this home. Here this is in a graphic form. Same thing, you can see the smaller number is the amortization, and then the larger bar graph part is the appreciation lost. And then you can see here your additional cash required. Well, why is that? Well, if the purchase price is more and you're still doing a 5% down payment, then it's going to cost you more money out of pocket to put the same 5% down on a higher priced property. Plus other things are more expensive as well, depending on the price of the home. Your title insurance is apt to be more, homeowners insurance, things like that. And then here's the graphic showing just your loss in cash flow. This is talking about your monthly payments. So again, if you wait 6 months, your monthly payment is going to be $43 higher, all things being equal, than it is right now. If you wait 3 years, you're going to pay $190 more per month on this same property, assuming rates stay the same and don't go up. So again, just something to think about and something to consider as you're trying to decide whether it's right to wait and see if prices, come back down or the market comes back down. Again, the forecast is not for that to happen anytime soon. So, for the time that you wait, if you're ready to buy, it costs you in both amortization and appreciation. So if you want to take a look at your situation and see if it makes sense for you to buy now or wait, let me know. I'll be glad to put together an analysis for you, and we can just see what the numbers hold or what the numbers tell us. Okay, thanks for watching, and we'll see you soon.